If you look at Bitcoin's price, and we think it'll be at least 250,000 by the end of this year, okay, that's the rows, so it's the second to last row. If Ethereum price ratio gets to its 8-year average of 0.0479, that implies 12,000 per Ethereum token. If it gets to its 2021 high, which I think is justifiable given how much is happening fundamentally on Ethereum, that's $22,000 per ETH. Okay. But I don't think that's the ceiling. The ceiling, another waypoint is that Ethereum becomes the payment rails of the future, and so its network value matches Bitcoin. Well, that would be $62,000 per ETH token. So with ETH at 4,100, as you can see, each of these three values represents tremendous upside.
Let's delve into a profound analytical framework from Tom Lee, drawing a compelling parallel between Ethereum's current trajectory and the pivotal financial paradigm shift of 1971. Lee posits that we are witnessing Ethereum's 1971 moment in 2025, driven by an undeniable institutional imperative on Wall Street to build on neutral public blockchains. Ethereum's commanding 68% share of total value locked, TVL, on public chains, a metric historically acting as a robust price floor, underscores its indisputable dominance. This isn't just about market share, it's about the deep-seated trust and utility that major players, even Swift, are exploring for on-chain migrations via Ethereum Layer 2 solutions. Lee emphasizes that this preference for public over corporate chains, coupled with Ethereum's emerging role as a foundational layer for AI products, paints a picture of unparalleled fundamental strength, positioning it for exponential growth as financial infrastructure converges with digital innovation.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
This 1971 moment is happening to Ethereum in 2025. And why is that? Well, all these firms on Wall Street need to be building something on a blockchain, and they want to build it on a neutral public chain. And as you can see, there are many companies choosing to do this on Ethereum. In fact, if you look at something like value locked on public chains, Ethereum is the chain of choice. So they have 68% of all total value locked. And of course, TVL has acted as the floor for Ethereum in the last few cycles. Even Swift, as you know, a few days ago, announced that they're going to run some experiments with on-chain migration using a layer 2 on Ethereum. So again, Swift is a company that is showing that they want to use a public chain, not a corporate chain. And on AI, there's a lot of talk about Ethereum as the place where you're going to be building AI products. Okay, so what does this all mean? Well, here's Ethereum's price history since 2018. It made its high in 2021, okay, and then you can see this huge, massive consolidation over the last 4 years, and we're beginning to break out of this range. I would look at the prior period of consolidation. Ethereum was consolidating from 2018 to 2020, and then the token went from $90 to $4,866, or more than a 50x return. The low for this cycle was $13.85. So where will Ethereum go? I mean, I have some thoughts I'll share, but again, if you look at this chart, it's not bearish. Okay, this is a bullish chart. And another chart to think about is Ethereum's price ratio to Bitcoin. It's currently at 0.036. The average has been 0.047, and the high in 2021 was 0.087. I think that these numbers matter because to me, Ethereum is having its 2025 moment. Like 1971, I think its price ratio should at least recover to its prior high of 0.087. So what does that mean? Well, if you look at Bitcoin's price, and we think it'll be at least 250,000 by the end of this year, okay, that's the rows, so it's the second to last row. If Ethereum price ratio gets to its 8-year average of 0.0479, that implies 12,000 per Ethereum token. If it gets to its 2021 high, which I think is justifiable given how much is happening fundamentally on Ethereum, that's $22,000 per ETH. Okay. But I don't think that's the ceiling. The ceiling, another waypoint is that Ethereum becomes the payment rails of the future, and so its network value matches Bitcoin. Well, that would be $62,000 per ETH token. So with ETH at 4,100, as you can see, each of these three values represents tremendous upside.
Examining Ethereum's price history since 2018 reveals a massive 4-year consolidation, now showing clear signs of a bullish breakout. A pattern reminiscent of its 2018 to 2020 accumulation period that preceded a staggering 50x return. Lee's analysis is not merely observational, it's a forward-looking projection underpinned by the critical ETH-BTC ratio, currently at 0.036, significantly below its 8-year average of 0.047 and 2021 peak of 0.087. Lee argues for a justifiable recovery to its prior high. Should Bitcoin reach Lee's projected $250,000, an ETH-BTC ratio of 0.047 implies a $12,000 Ethereum. More ambitiously, a return to the 0.087 ratio yields a $22,000 ETH token. However, Lee doesn't see this as a ceiling. He envisions Ethereum as the future's payment rails, suggesting its network value could eventually parallel Bitcoin's, propelling ETH to an astounding $62,000.
So let me get to this last point about if you're interested in ETH, why would you consider owning a digital asset treasury company? Now, we post this on our website at Bitmine every month called the Chairman's Message, but I'm going to run through this quick because I want to cover this in a few minutes to try to have Q&A. But an ETH treasury goal is to increase your Ethereum holding per share because they can issue stock at a premium, buy more ETH, okay? And the case study to watch is MicroStrategy, which went from $13 to $335 per share. The way MicroStrategy did this was issuing shares to buy more Bitcoin, and in the 5 years since MicroStrategy started the strategy, Bitcoin was a 10x, 11,000 to 108,000. But MicroStrategy stock went up by 25 times, meaning they outperformed Bitcoin by using their treasury strategy. And Bitmine is following the playbook.
Bitmine is the second largest crypto treasury in the world,
Raising capital at a pace faster than MicroStrategy. But one of the keys, of course, is Bitmine, and there's a lot of treasury stocks out there, is one of the most liquid names. It is ranked number 26 in the US stock market today, trading $2.6 billion a day. Bitmine trades more per day than Visa and Opendoor, and it trades almost as much as Marvell Technologies or IonQ on a daily basis. Now that's been an advantage because you can see when you look at the 200 treasuries out there, Bitmine and MicroStrategy represent 84% of all the trading volume. So that's where the institutional flows are going to be going in terms of companies holding the stock. And that's allowed Bitmine to grow its treasury holdings rapidly. You can see that in the roughly 9 weeks since the company started, the Ethereum held per share has increased by 9 times. So that velocity means we've vastly outperformed Ethereum. So if you're looking to be bullish on Ethereum, an Ethereum treasury stock can deliver you more Ethereum every day. But that's not where it ends. Ethereum treasury companies, I believe, are crypto infrastructure businesses. Because Ethereum's a proof of stake, companies will stake their Ethereum in exchange for providing network security, and that generates a yield. And we believe over time, anybody who tokenizes on Ethereum is going to ultimately stake ETH for the same security reason. And that's the strategy at Bitmine, that we're going to be a community participant in really making sure the Ethereum Foundation and Ethereum developers are successful on DeFi. And the company will make moonshot investments to seed these crossover Wall Street to crypto entities. One of the first investments was Bitmine's investment into 8Co, which is Orbs and the WorldCoin project.
Beyond direct token exposure, Lee introduces a compelling strategy, the digital asset treasury company. Citing MicroStrategy's phenomenal 25x outperformance of Bitcoin through strategic share issuance to acquire more BTC, Lee highlights Bitmine as an analogous play for Ethereum. Bitmine, as the second largest crypto treasury globally, is aggressively increasing its ETH holdings per share, exhibiting a 9-fold increase in just 9 weeks. Crucially, Bitmine is not just an accumulator, it's positioned as a critical crypto infrastructure business. By staking its Ethereum holdings, it provides network security and generates yield, aligning with the proof-of-stake paradigm. Furthermore, Bitmine is making moonshot investments into foundational Web3 and DeFi projects, bridging Wall Street to crypto, such as its early investment in OCO Orbs and the WorldCoin project. For those bullish on Ethereum, a liquid and strategically managed treasury stock like Bitmine offers a potent mechanism to capture amplified upside and participate in the foundational build-out of the decentralized economy.